Will this have the impact that SEBI really wants it to? We'll have to wait and watch. But a couple of stocks in focus on the back of this. BSE buzzing up over 7% in trade. Most likely that's due to these new proposed curbs. Rucha, break this down for us. What's the impact on BSE and why is it up 6.5%?
Thanks, Harsh. So, as you rightly mentioned, this is on the back of the new F&O curbs proposed by SEBI. Now, NSE has weekly expiry on 4 of the benchmark indices, namely Nifty, Bank Nifty, Fin Nifty, and Nifty Midcap, while BSE has only on 2, namely BSE Sensex and BSE BankX. Now, SEBI, in its proposed regulation, suggests that each of the exchanges can provide weekly options expiry and in only one index. So, BSE, NSE, each will have to choose one index on which it will provide the weekly options expiry on a particular date. Now, it is highly likely that BSE will not choose the same date and the same index to provide the weekly options expiry as that chosen by NSE. So, it is likely that volume on BSE will increase as the traders betting on the weekly options expiry will shift their focus from NSE to BSE. Also, talking about the options volume as a percentage of revenue, 60% is what the options volume account for as a percentage of total revenue for NSE, and the same figure is 40% for BSE. So this shift in volume from NSE to BSE will likely increase the volume on BSE, and this is why BSE is up around 6.5% in trade today. So positive for BSE, but negative for NSE.
Okay, so that's the assessment, positive for BSE, negative for NSE, and that's why at least the BSE is up 6.5% in trade. Let's go across to both our guests. We have Ashish Maheshwari, Director at Arihant Capital Markets, and Vaishali Parekh on the technical side. She's VP Technical Research at Prabhudas Lilladher. Welcome both of you to Ask Profit today. Thank you for doing this. First off, let me go to Ashish. Ashish, your views with regard to the impact of these new F&O norms by SEBI on market participants as well, and specifically to the listed universe of stocks?
As far as the market participants are concerned, though, these norms are quite harsh if you ask me, because in the last few years, exchanges have done left and right introduction of new contracts, weekly expiries, and a reduction of lot size in just order to increase the volumes. But now, with these new norms where there will be higher margins requirements and fewer strike prices also available, I think this will take surely some hit on the volume. Because one thing we must not forget that mostly the traders which are having lower capital with them, they come and play they come and they buy the options, so that you have limited loss, but at the same time you have euphoria that you'll have unlimited returns that you can make. But ultimately, like what SEBI has said, 60,000 crore rupees is being lost every year. I think this will certainly impact the volumes of brokers for sure. And these listed players will have surely some impact on their earnings also, because the depth will come down, the spread will be higher. So high frequency trading is surely going to come down by the traders like who use options to trade.
Right, Vaishali, let me come to you. You have enough experience in this domain and space. Do you believe SEBI will achieve what it has sought out to achieve through these norms?
Well, so initially, I think there could be some restriction, yes, of course. But on the whole, I feel, and my experience is that market players, they somehow look for some loophole, they look for some possibility of how to trade, and I don't think this will stop.
Okay, and Vaishali, just from a perspective of how should one look at the current environment with which policy is being framed? There's been a clear pushback against trading, and the larger impact of this is on the retail participation. Do you believe that may impact markets in the near term from market perspective? Of course, retail investors, you've said what you've said, but from market perspective, do you believe that there will be an impact on markets?
Well, of course, with activities, a slowdown in market can come to consolidation, to some profit booking. But having said that, I would still feel that, it is a golden rule that the only way to make wealth, to create wealth, is only through discipline buying and holding on for a period of time. So I guess that will be an awareness and people will get into that. So, and that should happen. I would be really happy if, because most of the newcomers in the market or aggressive traders who do not know how to follow any discipline, they lose money. So the idea of SEBI to get into all this is, I think, to bring discipline and uh, awareness. So I think, yes, this should be, there should be some stringent rules as far as all this is concerned, because right now what we are seeing is market is just going one way, but there will come a time when market will be showing some tension, market will be showing some profit booking and all, and that is the time when people actually come in trouble. So I guess this is a precursor to have a disciplined trading.